Hi guys, November 22nd, we're going to look at the sequences in greater detail. So as you know, yesterday we had an overwhelming probability of a move 3, but that got postponed. So now it's actually Sunday night when the futures are going to be open for trading tomorrow on November 23rd at 6 p.m. There's a probability of some wild things happening. Now, despite of the seasonality of the calendar, yes, it's a Thanksgiving week. A lot of people are not expecting any big moves in the market, but this sequence is deadly. So let's review the sequence. Last week I posted a sequence explaining all of these moves, but let's just focus on the last four here. So we actually had a sequence 2, 11, 11, 2, the grand reversal 2 move right here. And yesterday, we're supposed to go straight for a 3, which would be a gap down and a drop. Instead, the market pulled off a 7. So officially, the sequence is 2, 11, 11, 2, 7. Now, the last time we had an interruption in a sequence where it was highly bearish, it was interrupted by a positive day in the market, which was a move 8. And exactly where that took place was right here. Remember, we're going for a sequence of 2, 2, 2, 3. And then all of a sudden we had this 8 move, okay? And guess what? Look at the candle right after that. So I'm basically telling you that this setup, when you have a highly bearish sequence, okay? And based off all the probabilities and all the studies we've done here at 30 market moves, over the course of last 10 years, okay, when you have an oddball move interrupting a highly bearish sequence, okay, the markets have this function of delay effects at times. And so this, what happened yesterday, okay, it actually has a lot of bear characteristics, but overall it is a green move. It's a move 7, okay? And there's slight variations of a move 7 where basically between 10 and 11, I mean, you got to watch out that time frame. In a move 11, we'll make a big pullback, and sometimes it'll go, it won't go negative for the day. But yesterday was one of those variations where we actually go negative for the day for a brief amount of time, and then we reverse out of it and ultimately move higher. What also is incredibly important is, if you were trading with me, you know how critical the level of 66.70 has been. And so, and when we trade S&P 500 futures /ES, right? ES futures, the numbers are slightly different from what you see on this chart of SPX 500. But basically, it's another 20 points or so. So there was a moment yesterday where we briefly went above 66.70 level to like a 66.75. If you look at the S&P 500 futures chart, not this particular chart, but you see the same idea. What would be an equivalent of a 66.70 level on S&P 500 futures here? It's like, give or take, probably 20 points lower or 15 points lower. So here, this level would be 66.60, let's call it. And as you can see, the market's been struggling around this level. Like if you were to draw an imaginary line right here where all these wicks of candles are sort of sticking out, right? You were to draw a line right here. You see on the way down, the market was struggling. Like it would go to that level and bounce off of it. Look, the next day it's trying to hold that level, but then the mechanism of the market shifts. So now you have candles shooting up to that level, right? 1 day, 2 day. On the day where you finally have this momentum to the upside, right? I mean, that's the day when I'm screaming at you, fucking short, 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 right? And everybody's like, no, I can't. It's too fucking scary, Leo. I can't fucking do it. Like, that's the day, I mean, you make a ton of money. I mean, that's the day, of a 300x trade right here. Just like the day right here. As you can see, these candles are similar in size. These candles are similar in volume characteristics. As a matter of fact, volume is pretty much identical here and here if you were to measure the size of the volumes. But this sort of completes the pattern of a major pattern, which would be a head and shoulder, right? And shoulders are very well defined here. Now, the problem with the head and shoulder pattern is you will have some days where when this formation takes place, you may have a day or two or three where you could get some sideways action still. Now, how severe the current market conditions are, I think we're not going to have to go and sit through, multiple days of sideways action here, which normally you would actually associate that with a Thanksgiving week. Okay, lighter volume, don't expect any key levels to be broken, right? That's sort of the mentality that, everybody's going into with the Thanksgiving week. And Thanksgiving, hey, overall, it's bullish. Lighter volume, normally associated with more of, green action rather than red action in the market. But what I'm saying is there's nothing been normal about the market in the last few years. So when we're looking at the setup like that, all of a sudden that seasonality of a Thanksgiving week, I take it and throw it out of the fucking window. Because all of a sudden that is not an argument to be used in a market that just completed such a bearish pattern. And when sequences are interrupted, a bear sequence like this, 2, 11, 11, 2, is interrupted by all of a sudden a green move like 7. We know what the recent history tells us happens next, and it's a red candle. This is the formation that we are expecting, and it also can trigger a wave of selling. See, all we'd have to do tomorrow night when futures open is to actually attempt to break this level of 65.25, which is, as you can see, it's only 80 points lower. So if by Monday morning we are successful at doing that, the future is going to start trading at 6 p.m. tomorrow. You come in Monday, you could be walking into a major gap down, okay? Major gap down that is actually, by the time the market officially opens at 9:30 Monday morning, we could be under this level of 65.25, which means you'd be looking at a gap down of over 80 points, possibly over 100 points. Now, my prediction is we could actually get a gap down Monday as big as 200 points. Okay, and when we put things in relative perspective, right? So understand that even though yesterday on Friday the markets finished in the green, they finished above the prior day close, and it seems like some people were perceiving this, hey, maybe this is the bottom, let's start biting here. But anytime, look, the formations of these candles are, they're alike. Look, this candle is almost identical to this one in formation. Look, you have a wick coming out here, another one out here. Look, it's an identical candle to this. What happens next? You have a very similar candle, but look, there is a moment where the level of the prior day is broken below the prior day level. And then the next one, okay, so you get the idea. What we don't know with 100% certainty is the size of the candle. So in other words, it could be a smaller size red candle like this, but it could be a much bigger size red candle like this. Now, I would dare say that based on these sequences and the way they have been developing, I would not actually discount. As a matter of fact, that's the trade that I personally put in, a bunch of my guys put, and if you're trading with another 13 market moves coach here, you would also put this trade. We have a great position now built with an out-of-the-money puts on a variety of instruments, RTY, oil, natural gas, all of these things, with the expectancy of an outsized move. See, most of the people are going to be going into next week expecting this sort of candle, you know, maybe a slightly greener candle, hoping. A lot of people are just sitting and praying there that bought the dip here, that bought the dip here, that bought the dip here and here. I mean, they're just sitting and praying that, I mean, the worst is over. And they're just hoping for a fucking green day. And it's that mentality, you know, in a bear market that gets trading accounts killed, that gets, you know, people killed, you know what I'm saying? Because we're nowhere. I mean, this is just officially, we just completed a top information. Okay, and importantly, just like you see, the market gave up about 50 points worth of green in the last 30 minutes of trading. That gives us the velocity. A day ago, I was talking about the velocity of this move. And basically, there is a moment in the day where the number of points by which S&P 500 is dropping exceeds the number of minutes within which the drop is happening by a ratio of higher than 2. Well, the same thing was observed yesterday. And even though it doesn't look as dramatic as, you know, this red candle, which makes you millions, right? I mean, this doesn't look like it, but the speed of the drop, like, sure, the day was green, but if you look at the last hour of the trading session, specifically zoom in on the last 30 minutes of the trading session, all the gains that were built for the day, they were erased within minutes, okay? So we had the velocity on the drop at the same speed as we had when this red candle was formed. And that tells you this is not a bull market, and that tells you that the probability of a red day on the next trading session is much greater than the probability of a green day. Okay, the market staged slight delay of a major move lower, but as you can see, recent history points, it doesn't cancel it, it just delays it by a day. So now the setup, see, you're going to have these opportunities to make, you know, 20, 30, 40 type X trades when the market initially goes high, because it creates enough room for a move expansion to the downside to where, you know, if you're not sitting there just, you know, buying calls like an idiot, if you're actually using these bounces to short, okay, then you're catching, like this move that we shorted, guys, and I wish I could show you the messages from the group chat. Like the level that day was 67.90. We hit a high of 67.91, and it's in the group. I fucking sent out multiple messages saying 67.90, top, 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 short, 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 top, top, top. You know, so within a point, we nailed the top yesterday, the day before. Within a few points, I knew 66.70 was it. Now, there were two possibilities yesterday, 66.40, level of 66.70, which we closed below both of these levels. And that's the key. That's why, even though this was a green day yesterday in disguise, it is the behavioral pattern of the move, the velocity part where the gains for the day are erased in the last 30 minutes. They tell us that the market is in a severe danger zone here. And what we can do is, just to confirm some of this, just go look at some key stocks. So let's just pull up Tesla, and I'll show you why I'm using stuff like Tesla, okay? So there was a point in the day, right? Tesla actually goes green, but does it finish green? And the answer is no. It doesn't finish like at exact lows of the day, but there's a moment Tesla is up, it's green, it's over 400, but not only does it not finish above 400, it like finishes almost 10 points below that. And most of that move happens when? In the last hour of the trading session. So it tells you this is not bullish. As a matter of fact, I mean, I would say, Tesla's got to be one of the easiest shorts that anybody can fucking short right now, because it's going back to 200. And, you know, this is the thing with the market. I mean, it's got miles and miles to go to the downside, but yet some components of the market, like Bitcoin, right? I mean, it's already pretty freaking close to its April lows. And, most of the people expect it to not break the April lows, But I'm saying it is going to break the April lows. And Tesla, let's go 9 months. I mean, it is so far off April. Look, April, Tesla, 220. What I'm saying is not only we're going to see Tesla shares at 338, should be the next stop on the way lower, but we're going to see Tesla shares absolutely in the 200 range. I mean, ultimately, we're going to end up at 220, 240. I mean, there's a chance, actually, Tesla's going to be trading in like 150, 180 level in the next 60 days. It's not going to be a shocker at all. So, like, this is a fucking top. Like it or not, okay? And you better love it because, I mean, it's easy to short this, okay? When we look at overall market, and we go to S&P, okay? I mean, do you see this, just this top information has just been complete, okay? And we're going all the way back to April lows. Not only we're doing that, we're going to break the fucking April lows. And most of the people just think the worst is over. Right now, they think yesterday was the bottom. Hallelujah, congratulations, it was the bottom. From here, we go higher forever and ever. Forget it. It is exactly for that reason that the market's going to drop way the fuck lower, because there's still so many idiots out there buying the dip that, you know, guys, I mean, this shit is about to collapse the fuck out. So I wouldn't be shocked if these red candles actually began looking like the candles that are about to take place would actually begin looking like these candles. And that's how you can get to this level rather quickly. I mean, you can literally be at 6,100 level within a day or two. Yes, I said it. We're at 60. We're still above 6,600 right now. I'm saying we can drop 500-600 points within 2 trading sessions. Okay, so when we look closer, so I mean, I'm showing you this longer time frame chart so you have an overall view, like how much lower we can go. And I mean, this one, 61, 62, I mean, we can cover this distance within a day or two. So you could be coming in to what could be argued is one of the biggest one-day drops in the history, probably outside of October 19th, 1987. And it's going to unveil right in front of the eyes when nobody's fucking expecting it to happen. Because why? It's a Thanksgiving week, damn it. How do you expect the market to crash on a Thanksgiving week? And yet, you could be coming in on Thanksgiving, logging into your stock charts and seeing that, oh shit, you got some candles that look like the April candles, with the exception they're happening in November. Now, I will say this with a grain of salt that, you know, my big bet is on, and it is spread not just over next week expiration, but it's also catches December expirations, multiple weeks in December. So clearly the options that expire tomorrow, you know, I'm thinking tomorrow because it's Sunday, 6 p.m., but like, I mean, the actual expiration of those is Monday, Tuesday. You know, so those short-term ones, okay, if we do get this red candle is similar to the April action, I mean, those are going to pay stupidly, crazily in the out-of-the-money strikes, okay? And so, I mean, we have potentially some traders who are going to overnight be instant millionaires, if I'm correct on the size of this next candle. So I've shown you the shorter time frame, which was 3 months, so you get a feel for what the actual formation and what's the day-to-day sequence is. I've shown you how the one-day green move interruption played out in recent history. The one thing I didn't talk about is the fact that move 7 yesterday was a Friday, and we had an identical formation move last Friday, and they even looked the same, and this was actually a move 4. I mean, for those of you that studied the 13 market moves, you understand what the difference between 4 and a 7, but just, you know, without going into specific details of what actually separates them, you know, you see how similar these moves are, and they happen on a Friday. And you should know that this is a preset, this is a context, and if you look at what happens next, you get 1, 2, 3, 4 days lower. Okay, and basically I'm telling you that we are about to get 3, 4 days lower, with the exception, the one thing we don't know with 100% certainty is the size of each candle. Okay, but we do know that the velocity on the drop side in the last 2 days is equal to the velocity of the drop during the COVID crash, which you wouldn't just know by just looking at these candles, but it's something you got to go and you got to do your mathematics every day when you trade to calculate and understand that, this size of the drop on certain time frames throughout the day matches or exceeds the speed of the drop during the COVID crash. Okay, and that factor right there does not lead to a new bull market. That factor right there does not lead to nothing but an escalation of the drop to the downside. So now that you know this information, you want to zoom out and you go look at the longer time frame and you see how much more room we have to drop, right? And clearly, there's stocks. Look how fucking ridiculous this is. There's stocks out there. These are good stocks. But, you just see the point. April low, $30. We recently shorted this thing at 170. It's at 133 right now. This stock is still 4 times higher than where it was April lows. Stocks like APP, which, we've been shorting APP, almost had it. This shit almost broke down. And if it did break, yesterday it had a chance to go all the way to 452. It hit 489 and bounced out. But this trade right here yesterday, guys, this trade could have made some of you guys $1 million. Just this one. And as you can see, this one was trading at 175, 200 in April lows. It's been fucking around here, around 650 for a while. And it's just, look, this stock is capable. Look at these candles, right? So this stock is capable of making drops. They're like 30% one-day drops on this thing. And recently, yes, it's been dropping, but it has not made a max size candle. There was one right here from 700 to 540. This is a one-day drop in this thing. So when we're trading options, ideally you want to trade the instruments that have the ability and the historic precedence, and we have plenty, like 1, 2, 3, 4. There's these stops. 30% drops in a single trading session, that's what gets you paid on weekly options, trading this stuff. So we have not had one of these monster candles yet. My bet is it's about to take place. So don't be shocked. We're going from 520 to 423 on this in a matter of a day or two. It's fucking going to happen. So, and look, the point I'm demonstrating is this thing is so way above April lows. It's got so much room. There's so many people that can sell this thing. But it doesn't stop there, right? You can go stock by stock by stock. Even like the greatest stocks. The ASML. Okay, April lows, 570, close to 1,000 still. There's a ton of stocks, guys, that that are going to be going lower. And some are in the process of getting there. For example, Spotify, right? You got a variety. I'm not going to, you want to know all of our shorts, you come and trade with a 30 market moves coach. I'm just showing you that so many stocks are still way above their highs, but when you, April lows, but when you look at Bitcoin, it's pretty, it's close. You see what I'm saying? 74K, April low, and my bet is going to break it. Most of the people think that's it. This is the low. We're at 80K. We almost touched 80 yesterday. Like an hour before the market opens, we were at 80,700. Now, you just go back, review the recent videos. Review all the fucking videos. Like, the only fucker on YouTube that told you to short this stop and this stop and this stop instead of telling you to load up on calls and watch out, it's going to be 200,000 by the end of the year was me, motherfuckers. So, and each bounce, you know, the unfortunate part is only now fucking people are setting up their coin call account to short Bitcoin. Now you want to fucking short it. Jesus Christ, this is almost a 50,000 point drop. You know what's crazy about it? Since I started talking in this video about the seasonality. Well, anybody that's in crypto space, they tell you, you never short crypto in October or November because that's the crypto summer. Historically, okay, crypto never fucking drops in October and November. So how do you dare, Leo, how do you dare short it in October and November? Are you out of your fucking mind? And that's exactly what we've been doing. Shorting the fuck, just buying the fuck out of Bitcoin, Ethereum puts every fucking day, basically, because we're trading them daily and options. They have daily expiration. So, guys, I mean, look at this. And that was the point in the podcast yesterday. I said, how can you respect yourself as a trader? You don't even have the fucking tools to buy puts on the very thing that moves the most. I mean, some of you are sitting there watching the fucking, stocks like, I don't know, Apple? Like, by the way, Apple is a easy short. That shit is absolutely going to fucking drop. I mean, look at where Apple is in relation to the April lows, right? I mean, it's not my favorite short. I mean, options on Apple are so fucked. I mean, you got to really like isolate and catch the perfect move, the perfect entry, the perfect everything on it to be able to put a big trade. But absolutely, I mean, this shit is going to drop. It's not as ideal for trading options, I just said, as like a lot of stocks that we're short and, we're going to be adding positions on this week. But you get the point. I mean, the market still has so much room to go lower before a lot of these stocks are going to get anywhere in remote closeness to the April lows. But my point is, we're not just going to hit the April lows. We're going to go way below the April lows. And therefore, what everybody thinks about Bitcoin right now, that this is the bottom. Okay, we almost touched the 80K. There's no way. Like, understand this. I remember when Bitcoin was at like, 20,000 in December of 2017, and I was shorting it, and people were telling me, and we would, from 20, we dropped to 18, to 16, to 13, and then there were people sitting there and just screaming, no, Leo, you're fucking crazy. You don't understand. There's no way. Bitcoin will never drop below 10,000 ever again. And I told them, fuck, it's going to 3,000. And it did hit 3,000 like in December, in October of 2018. So exact opposite basically happened. What 99.99% of people expected. The exact opposite is happening now. Right? We hit 125. Everybody says, no, we're going to fucking 200. Right? I mean, I don't understand. How can these people have a fucking job? How can they still on CNBC allow the shit that people go and they still sit there and tell you with a straight fucking face, like, right? They had you buy the fucking top and now they're coming back. Zero fucking remorse. Nothing. No goddamn apology. I mean, the shit is down 50,000 points. Do you understand how many fucking people they have talked to into buying this stop, telling them that this shit is about to explode to 200? And they're still welcome back on CNBC. Goddamn Tom Lee. Oh, this shit is going forever higher. Fuck you. I mean, that's the shit that pisses me off. And then you have fucking 13 Market Moves, little less channel. Gets 1,000 views in a fucking video, okay? And then fucking, like, who tells you the fucking truth? And it's just, I mean, it is just like the fucking media reach, these other channels and CNBC is so much greater, but yet the channel that speaks the fucking truth about these things, I mean, we get so little coverage, guys. So, I mean, how many more people would benefit from fucking shorting Bitcoin at 120, 125 instead of listening to all them supposedly, Wall Street fucking gurus that know everything about where shit is going, right? Fuck them, bro. Like, that's why I'm saying you gotta have your own brain when you fucking trade. And to finish the point I was trying to make, in December 2017 and slightly after, when Bitcoin began the descent similar to what it's doing now, people are saying, Leo, there's no way it's gonna drop below 10,000. You don't know what the fuck you're talking about. There are people right now, okay, like literally, not like a few days ago, people were sitting there in the media and saying, there's no way Bitcoin will ever drop below 100,000. It will never happen. You don't know what the fuck you're talking about. It'll never drop below 100,000. Okay, we almost touched 80,000 yesterday. And now it's bouncing, and the same fuckers that were telling you, there's no way this shit is going below 100,000, guess what they're telling you today? Well, there's no way this shit is going to go below 80,000. It's the same people who were telling you a few days ago that there's no way this is going below 100,000, and now telling you there's no way this shit is going to go below 80,000. And guess what's going to happen? Same shit that happened in 2017, 2018. When people thought there's no fucking way Bitcoin could drop below 10,000 and it goes to 3,000. Right now, people are telling you there's no way this shit's going to go below 80,000. Well, guess what? Not only is it going to go below 80,000, but it's going to break below fucking April lows. And what the fuck are they going to tell you then? Whoa! I mean, I'll tell you what's going to happen. Exactly what the fuck is how this shit is going to play out. Now they're sitting telling you there's no way it's going to break below 80,000. Then, when it breaks below 80,000, they're going to say, well, Michael Saylor, they're going to step up. They're going to fucking buy it up. Michael Saylor average cost is 74,800, roughly. There's no way he's going to let it go below that level. He's going to step up. Man, you don't understand. BlackRock is going to step up. They're going to scoop it up. Man, everybody that's got all these big pockets accumulating the fucking top, well, they're about... Man, you understand, this is almost 50% below this level, and they're going to step it up, and they're going to fucking buy it. And my argument in response to that would be very simple. You don't have a fucking clue what's about to happen, motherfuckers. This shit is going to 35K. And if you were BlackRock, you would also dump your fucking Bitcoin. You know why? So you could buy all the Bitcoin that Michael Saylor owns, dumb fucks. Okay? Why would you want to step and support Bitcoin at 74K when you know the only other guy besides BlackRock that owns, I mean, besides Satoshi Nakamoto wallet, right? Them two fuckers got more Bitcoin than anybody else in the world. BlackRock and Michael Saylor. So if you really want to own as much Bitcoin as possible, what would you do? You would let the shit collapse. Okay? And when MSTR shares are dropping, wasn't a bad short for us, by the way, guys. I mean, we did quite well, especially on the, on the last bounce right here. You see, overall bear trend, interruption with one green day, which we short at 211, and we catch almost a 25% drop within uninterruptedly 1, 2, 3 trading sessions, and it finishes within a couple of points off the lows of the day. When you look at this, okay, think that BlackRock would be so interested in bringing the share price of MSTR, let's say, to $30. So they can announce they're buying MSTR, and the amount's probably going to be undisclosed. I mean, who the fuck knows? They may just come out and say, "Hey, we'll save MSTR, so Michael Saylor doesn't have to go to jail. We'll save it. We'll offer it $77 a share." So I mean, this shit could collapse to 30 and then bounce to 77. Okay, because to me, this looks like exactly this is what the stage is set up for. You see what I'm saying? BlackRock would be interested in owning all the Bitcoin that Michael Saylor has. And the easiest way for them to do it is to just buy this shit right here The only thing, I don't know, why would they want to own all the strike and strife and all the garbage that Michael Saylor created to borrow money, to borrow Bitcoin? But you understand, right? MSTR cost on Bitcoin is 74K. If Bitcoin drops below 74K, MSTR stock is going to be under $100. And the main interested party in this would be BlackRock. And BlackRock's got a lot more money than Michael Saylor. As at this point, even at the current price, Michael Saylor is not buying Bitcoin. Do you know why? Because when Bitcoin price is going lower, he cannot fucking borrow. Okay? So here, let's go back and, this was, look at all of his costs, strategy. You can go to his site. It's all posted here. Look at the last fucking 20 weeks. All the buys above 100. 106, 105, 118, 119, 114, 117, 123. He almost nailed the top on this one. Can you imagine fucking being the guy that bought the absolute fucking top in Bitcoin? But with the exception, he didn't buy one there. He bought fucking he bought fucking 220 of them. Pretty fucking close, Michael Saylor. You almost fucking nailed buying the top, bro. Anyway, it's fucking funny to me. It's not funny to anybody that was listening to this motherfucker. Anyway, the point is, he's sitting, average cost shows here 74,433. It doesn't include all the shit he bought maybe last week, but my argument, he probably didn't even. So once Bitcoin price drops below his average cost, what do you think? Is he going to be able to borrow more money to buy Bitcoin? No. At that point, he's got, and we could be breaking 74 Bitcoin in the next 24 to 48 hours. So when I recorded the podcast yesterday, I basically said, look, Michael Saylor and BlackRock are probably going to be in the same room tomorrow on November 23rd trying to figure out if they're going to go the nice way about it or the hard way about it. But either way, it seems like, okay, BlackRock is on a mission to buy all the Bitcoin that Michael Saylor has got, and the easiest way for them to fucking do it is to crash the shit out of MSTR shares, drive them into the fucking ground, and then make a bid offer to take over the fucking company, which therefore will give them, okay, all the Bitcoin that MSTR owns, but also give them the debt that it is bought with. So maybe there is another way of how they can get the Bitcoin without having to deal with the debt that MSTR has created to acquire it. But either way, I think there's a lot of people that would be interested in driving the shares of MSTR way the fuck lower than where current price is. And by the increased volume, especially in the last 3 trading sessions, you could see that people are fucking panicking because this is the highest volume, okay, that we have seen in months on MSTR. And it is the volume to the downside, which means even under, guys, check this out. April, do you see April MSTR? April lows, 240. We're at 170. We're 30% below April lows. And so for those people that say, well, the market is not going to go below April lows, well, look at this fucking chart because this is a good representation of what's about to take place in the market. Now, another thing I want to bring to your attention, do you remember I was showing you the chart of S&P 500? Remember how well defined this red candle is and this red candle, okay? And the top information, just focus on this part of the chart. It is an identical formation to the one that S&P 500 just made. And after that, sure, a little sideways, a little bounce, but then it can't find the daylight. It just keeps going in the dark. Forever and ever after that. So if you zoom in on this part of the chart and catch this formation in your mind right now. Big red candle, top, big red candle right here. This is the formation that I want you to focus on. And I'm going to bring it to you right now one more time so you can see it for yourself in the chart of S&P 500. Big red candle, top, big red candle. So we're very close to a moment where the market is going to go uninterruptedly lower for an extended amount of time. And if you want to make millions, making money while that is happening, all you need to do is get in touch with 13 Market Moves Coach, sign up, and be ready to fucking roll, baby. Go to 13mmtv.com, 13marketmoves.com. Don't miss this unique opportunity to make money while shit is dropping. Let's roll.